Hey, y'all.
Hey.
Hello.
How are you guys doing?
Doing okay. What yourself?
Yeah.
Oh, no complaints. I'm wearing a dress shirt for the first time in months. So, I wasn't sure if this was going to be on camera or not, but I figured I might as well look the part.
You have your t-shirt on the top and then the pajamas on the bottom.
Yeah, well, I have jeans on. So
Okay.
I figured I'd be semi-professional.
Yeah. It's casual today.
That's right. That's right.
Just for starters, we'll have a Mike DuBose, the VP from IADC Houston, make some opening statement. I will present the mic. Afterwards, I will present you and Carlos a mini CV from each one of you. And after that, I'll pass to Patricia, and so you can start your presentation.
Okay. Are we doing questions after each presentation, or are we doing them all at the end?
Good question. How I prefer. Patricia, what's best?
I think we can leave for the end, right?
Okay.
Yeah.
Okay. Adriano Pasqualin precisa que alguém autorize a entrada dele lá no...
Quem criou o convite não fui eu, então tem que ser quem criou o convite, o pessoal aí da Oceano mesmo, que tem que deixar ele ingressar.
Tá.
Tá bom?
Francisco, veja aí, Roberto Pasqualin, autorização para entrada no...
Todos conseguem me ouvir?
Ok, agora sim. Mike, good afternoon, sir.
Hello, hello. How are you?
Good. Good.
Thank you for the invitation.
Mike, I will open the event. Present yourself, a mini CV, and pass the word to you for the opening statement. And after that, Patricia will handle it with the two guys from IADC.
Great.
All right.
So Patricia will be able to put up the few slides that I have.
Yes, if you send to me, I can share.
Okay. Shall I try to share them now to see if I can?
Okay, you can try.
Let's see. Yeah, we're good.
You can see?
Yeah, we can.
Yeah.
Very good. Thank you.
So 1 minute and we start.
Someone said in the chat on here that the YouTube looks like it's in slow motion.
YouTube is on the slow motion.
I mean, that's what it said in the chat on Teams. Adriana said that. I haven't looked though personally, so I don't know.
Yeah, I can't see it right now. I'll ask somebody to have a look.
Francisco is checking the YouTube access, and I just get back to you.
Mike, would you please remove the presentation for a few minutes so I can make the opening?
Hello, gentlemen. It's Richard here in Houston, Texas.
What up, Richard?
I'm representing the Marine if there's any questions. Offshore supply vessels, that kind of thing.
So maybe we should start. It's 3 o'clock sharp. Well, ladies and gentlemen, thank you for our attendance on this meeting. This is the Brazil chapter IDC seminar. We're bringing today two senior representatives from HS, and the webinar refers to the market outlook, especially in Brazil, especially in deep waters. So that's what is this about today. First of all, let me introduce Mike DuBose, our Vice President. I have a short CV from Mike over here. I will present Mike to the audience, and afterwards, Mike will say some words about IADC and about ourselves. So Mike, our VP from International Development, began his career with Rowan at the entry level of Rustabout in Gulf of Mexico in '78. He worked in offshore the next 17 years at positions including driller and OEM. He moved into shore-based management and accepted positions with increased levels of responsibility into US, UK, Aberdeen, Nova Scotia, all with Rowan. Mike has served as Vice President of Drilling Operations in Southeast Asia, where he oversaw offshore operations for 4 jackup units. He retired from Rowan in 2014 after 35 years with the company. And today, Mike is our Vice President from International Development. Mike, please, your opening statements for this.
Yes, thank you very much, and it's a pleasure to be here with you. I look forward to the time when we can meet in person. I'm sure everyone is familiar with the IADC antitrust guidelines, and this meeting discussion will be held under those antitrust guidelines. So shall I give my short presentation now?
Yes, please.
Yes, certainly. So first, I'd like to just share my screen. So hopefully you can see the screen there.
Yes, we can. Yeah.
So just a quick update, if I may, on some of the things that IADC has been doing to try to assist the industry around the globe. When all of this first began to break in early March, IADC set up a COVID-19 webpage, and that is continuously updated, and it has protocols, processes, procedures from all over the world. As some of you will know, Roberto Pascaline represents us quite well down in Brazil. We're very thankful for his work. We also have 7 other colleagues around the world. So IADC is able to pick and choose and to offer some of these other learnings from different areas around the world to try to assist chapters and regions to move very quickly in some of these processes and protocols as testing was being developed and things of this nature. We've also moved to a number, as many will be familiar, we have a number of conferences every year, about 14 global conferences. Obviously, those are no longer possible. So we have moved a lot of the discussions and virtual panel discussions to the virtual platform. We hosted one, it's been recorded, it's now available for your perusal at your convenience. This was covering the HSE performance during the pandemic. As we all know, a number of crews and crew members were stuck offshore for 60, 70, 80, 100 days. And so, interestingly enough, we noticed that the HSC performance was actually markedly improved in some areas around the world. So quite an interesting discussion there with some various HSC managers from drilling contractors. We continue to host these virtual conferences and virtual panel discussions. There was one on U.S. land that was held just recently on July the 15th, and we've got a couple more coming up in the next 3 to 4 weeks. So we would invite you to look at that at your leisure. Whenever the pandemic struck, traditional classroom learning virtually disappeared. So we moved very quickly to extend the existing certificates, primarily well-controlled certificates, IADC, WellSharp certificates for people around the globe. And then we moved very quickly to an online training facility, and WellSharp Live is now being administered online through various training providers around the world. And that has been a tremendous asset to try to assist our members around the world as crew members' certification and credentialing expires. They're able to do that as many of them are waiting in quarantine and things of this nature. I think it's also very important to point out the collaborative nature in which IADC has been working around the globe. We have worked very closely with IMCA, the Marine Contractors Association, the International Maritime Organization, to get out a letter that says that seafarers, rig workers are essential personnel, and they need to be provided access and the ability to move across borders. IOGP, as you know, we work in close cooperation with them, as well as the geophysical contractors as well. Overall, I would certainly say that the primary issue that our members have faced have been crew changes. When the global shutdown began, international flights became almost non-existent. The ability to move between countries, the ability to move between states within countries, very, very difficult indeed. So IADC tried to step in to assist with essential worker letters, offering some templates, offering some protocol and guidance, and worked very closely with the UK on some helicopter guidance, and all of that is available on the website. So effectively just sharing best practices to aid and assist the members in moving these essential personnel around the globe. But certainly I welcome the opportunity to be with you today. We certainly appreciate the initiative that the Brazil chapter has shown here, and we look forward to being able to see everyone in person again. Thank you.
Thank you very much, Mike. Prior to hand over the control to Patricia, let me introduce you Justin Smith. Justin will be our first speaker today, and the subject will be drilling trends in South America offshore. So, first of all, a small CV from Justin. Justin is an offshore rig analyst on the Petrodata team within IADC market. He started his career in 2006 with ODS Petrodata prior to its acquisition by IADC, but later worked for World Oil magazine, writing about the offshore sector. Upon his return to the Petrodata Group in 2012, now as part of IADC market, Justin began and continues to cover the offshore rig market. In addition to focusing on rig activity in South America for the Rig Point and the rig-based databases, in writing for the America's Rig Petro Daily Newswire. He's a managing editor of World Rig Forecasts, Short Team Trends. Justin has a BS in agriculture journalism from Texas A&M University. Justin, thank you very much for your attendance today. Let me hand over to Patricia so we can start your presentation. Patricia, would you please?
Okay, thank you, Heitor. Hello, everyone. So let me just introduce myself briefly. I'm Patricia Ruiz. I'm responsible for investor relations and market intelligence at Ocean. So this is going to be a 20-minute panel for each speaker. So we will start with Justin. After the 20 minutes for each speaker, we're going to have a 5-minute Q&A session. So I will now pass the word to Justin, and then right after we'll present Carlos Rocha and continue with the presentation. So Justin, you can start now.
Great, thanks very much. Let me share my screen here. Well, they already introduced me. I just want to also pass along a thanks to Richard Sanchez and Jennifer Moreta. I'm gonna have a little bit at the end about OSVs and field development activity, and they contributed to that part. So I just wanted to thank them up front. But I'm going to spend the bulk of the time talking about drilling rigs. And to start, South America has gone through something of a tradition over the last few years. It's not just Petrobras anymore, and it's not just Brazil, although that is the huge majority of the activity. But we're also going to touch on Guyana and Suriname a little bit extra too. So let's kind of jump in. The steep decline of the Brazilian drilling market has been long-running, having started well before the industry-wide downturn. At its peak in March 2012, the marketed contracted rig count in Brazil stood at 87 units, but since then has fallen to a low of 15 units in June of last year, which was nearly an 83% drop. But a combination of heightened interest from foreign operators and Petrobras replacing some of the rigs it has let go, the situation improved marginally by March of this year to 22 marketed rigs being contracted, but that's also begun to retreat slightly to 19. Most of this decline has come through the form of Petrobras and other operators letting rigs roll off contract, but it should be noted that Petrobras was also the most prolific of early terminators, having cut short more than 15 contracts over a couple of years starting in January of 2015. Of course, since the beginning of the downturn in 2014, the decline in activity and the corresponding growing surplus in available rigs has brought down day rates, both in South America and globally. In 2014, ultra-deepwater floaters, which are far and away the most common rig type used across South America, were still generally commanding rates for multi-year campaigns between $430,000 and $1,000 per day. But by the end of that year and into 2015, rates had plummeted into the mid $300,000 range and continued to fall thereafter. Before 2016 was over, South America saw its first ultra deep water rate drop below $200,000, eventually with a known low of about $145,000 by 2018. Although most of the rates have been higher than that, coming in between $180,000 and $230,000. It should also be noted that fixtures were very slow overall during this period, falling from 17 in 2014 to only 3 in 2015, and 6 each of the next 2 years. That trend has improved, though, with 23 fixtures taking place last year and 10 so far this year. Looking ahead, rates really cannot fall any further, as contractors have already cut margins to the bone, sometimes below their break-even price, just to keep their units working. But operators seem intent more often on delaying programs than taking run rigs at a higher rate. All of that said, there are operators actively seeking rigs out in the region. Petrobras has a few opportunities, including an ongoing multi-unit ultra-deepwater tender in Brazil, and it also has been going through direct negotiations for other rigs for areas like the Libra pre-salt block. But Petrobras had been seeking up to 2 moored semis for a couple of years now, a process that's included 2 reverse auctions that resulted in no contracts, and then more recently with another tender. But that was actually just canceled on Friday. Aside from Petrobras, in Brazil, Total has a 2-well tender and Equinor has a 4-year tender to develop the Bacalhau field. Plus smaller programs are in the works for a number of operators, including Karoon, PetroRio, Enauta, and BW Energy. Outside of Brazil, there are active tenders by Total in Suriname, Petrobras in Colombia, and Repsol in Guyana, as well as a host of smaller potential programs across the region, mostly for short-term exploration work of no more than a few wells. Even before the Lava Jato, or car wash, money laundering, and corruption investigation, Petrobras was already behind the 8 ball, being the most indebted company in the world. The operator, while routinely setting new production records, has had its earnings hampered by the low oil price. This and other factors have led to a number of changes in how Petrobras is run and what its priorities are. Where Petrobras has been focusing lately is developing discoveries made in the pre-salt. But there's a lot of logic to that. In 2010, pre-salt fields were producing 41,000 barrels of oil per day, but now the area has an output of around 2.4 million BOE per day, and that's just from 115 wells. A few years ago, Brazil's Congress voted to lift the obligation for Petrobras to be the sole operator of pre-salt fields, which then sold off its interest in some fields like Lapa going to Total and Carcara going to Equinor, which is now Bacalhau. At the same time, several pre-salt-focused lease sales have taken place, with operatorships being awarded to other large players like ExxonMobil, Shell, and BP. While the COVID-19 pandemic has made the timing unclear, more licensing rounds are scheduled for the future, not just for pre-salt blocks, but also traditional blocks, as well as that an extended beyond Brazil's continental shelf, more than 200 nautical miles offshore. There also remains interest to explore the Atlantic margin off Brazil's northeast coast, mostly from foreign operators. The downside to this area is that obtaining drilling permits and even seismic permits is a lengthy and occasionally unsuccessful process. Case in point, Total was denied a drilling permit last year for the Foz do Amazonas Basin due to concerns about a potential oil spill spreading cross-border and the block's apparent proximity to biogenic reefs. At the beginning of this year, Premier chartered drillship Valaris DS9 to drill an exploration well in the Ceará Basin in 2021. But the world is in a different place now with the pandemic, and the timing of this is a bit more up in the air. Before shifting away, let's update some of the complicated story that is Sete Brazil. In the beginning, the upstart pre-salt focused contractor was to build 29 ultra-deepwater rigs in total, with 28 of them contracted to Petrobras for terms between 10 and 20 years, and 1 on spec, with delivery scheduled between 2015 and 2020. Construction had started on 17 of these rigs, primarily at yards in Asia, but after Sete encountered a slew of financial and managerial issues, everything stopped. The completion percentages you see on the right side of this slide are from the last update SETDE gave all the way back in June of 2016, and no progress has been made since then. However, last October, SETDE's creditors came to an agreement to sell 4 of the unfinished rigs to Magni Partners, specifically Keppel-built semis, Urca and Frade, and Jurong-built drill ships, Arparador and Guarapari, 3 of which are already at yards in Brazil, except for Guarapari, which is still in Singapore. If everything comes to pass as planned, once the rigs are delivered, they will be managed by Atesco. Petrobras has already agreed to charter these 4 rigs for 10 years each with a rate of $299,000 per day per rig. Previously, the conditions tied to this deal had to be met by a deadline of June 30th, but this was just recently extended to September 30th. I'm going to touch on a few other countries outside of Brazil, primarily Guyana and Suriname. So let's start with Guyana. ExxonMobil's numerous and massive oil discoveries offshore Guyana have vaulted that country to becoming the highlight of its ongoing down market, spurring exploration throughout the region along northern South America. The operator currently has 4 drill ships working full-time in the country, and partner Hess has suggested a 5th rig could be added next year. While the first phase of the Liza field is online, development drilling is ongoing, with more coming for the second Liza phase and the Payara field, plus more developments to follow, as well as exploring the Kaitur and Kanye blocks. It seems as though Noble is in the pole position to secure much of this work through a commercial enabling agreement it signed with the operator earlier this year. So far, a total of 4.5 years of term have been awarded to Noble drill ships through this deal, with an additional 6 years available. However, ExxonMobil is not the only operator with success in Guyana, as Tullow made its first discoveries there last year at the Jethro and Joe prospects, which were drilled by drill ship Stena Forth. Repsol also made a small discovery at the Carpara well on the Kanuku block with jackup Valaris EXL-2 at the beginning of this year, which it plans to appraise next year. Meanwhile, CGX Energy has had a long and complicated history in Guyana in which it has deferred drilling multiple times with 2 different rigs, first with jackup Hakuryu 12 in 2015, and most recently with Ralph Kaufman. When or even if CGX will end up drilling on its 2 blocks in Guyana is pretty much a guessing game at this point. Following ExxonMobil's success in neighboring Guyana, Suriname has seen a significant increase in interest from oil and gas companies to explore its waters. Results from exploration drilling had been mostly negative, as Tullow, Petronas, Inpex, and Cosmos have all failed to find hydrocarbons. But that all changed with Apache, which rang in 2020 with a large discovery at its Maka Central well in Block 58. The company has since made another find on the block with its next well and is now drilling a 3rd exploration well with a 4th to follow. Once this drilling campaign is complete, equal partner Total will take over as the operator of the block and already has a tender out looking for a rig to drill appraisal wells starting as soon as the end of this year. Other operators have a number of drilling programs in the works too, including Cosmos and Tullow looking to drill next year. Ahead of that, Petronas has contracted Semi-Maersk Developer to drill 1 to 2 wells on Block 52 starting in the 3rd or 4th quarter of this year. Meanwhile, state oil company Staatsolie completed its 2nd shallow water drilling campaign in November, this time using Seadrill jackup West Castor. This job was intended to drill up to 9 wells, but the plug was pulled on the program after the 6th well when no commercial discoveries had been made. Beyond this, and its role as a regulator, Staatsolie has brought in several other operators, including ExxonMobil, Tullow, and Cairn, but there's no really word yet on when they might drill. I'm going to quickly touch on a few other countries. I'm going to skip like Chile and Ecuador that aren't really doing a whole lot. We'll start with Colombia. Following the changes to its contract model and licensing schemes, Colombia's National Hydrocarbons Agency has awarded 1 new block, but also signed a number of contracts for areas that operators had under the old technical evaluation scheme, putting a more reliable exploration schedule in place. Through this, new contracts were signed with Ecopetrol, Shell, Noble Energy, and Repsol. That last company, Repsol, has contracted drillship Maersk Valiant to drill 1 well off Colombia, although the timing appears to have slipped from this year to next. At the same time, Shell and Ecopetrol have taken over several former Anadarko-held deepwater natural gas fields. Kronos, Purple Angel, and Gorgon, in which they intend to appraise with drilling by the end of 2021. Over in Argentina, they completed their first offshore lease sale last year with 13 companies making bids on 18 blocks. Both shallow and deep water blocks received bids from well-established international operators, with blocks in the midwater Malvinas Basin and the deepwater Argentina Basin receiving the most action. Drilling is not expected on these blocks until the next year or two at the earliest, but that was likely the first of multiple lease sales to come for the country. Meanwhile, Total is expected to develop its shallow water Phoenix gas field at some point, but economic uncertainty in the country has delayed that to 2021 or beyond. And just to the east in the Falkland Islands, most work has basically slowed to a halt as its harsh waters and remote location make it a difficult place to develop fields economically. Premier has repeatedly delayed the development of the Sea Lion oil field, for which it is planning to drill 29 wells. The company signed a letter of intent at the beginning of 2018 to have Diamond Offshore supply a North Sea class semi for the work, but Premier has still not sanctioned the development and has extended the LOI, pushing the start of development drilling to mid-2022. Over in Peru, which has mostly relied on shallow water work done with platform rigs, it saw its first floater program in 20 years earlier this year as Karoon Energy drilled an exploration well on Block Z38. The operator drilled the Marina 1 well with a Stena 4th in about 1,200 feet of water, but only encountered non-commercial gas shows, and is unclear at this time if the company intends to explore the block further. Meanwhile, Peru has had a fair amount of drama with the other blocks it is awarded. The government handed 3 deepwater blocks to Anadarko in 2017, but it's unclear what Occidental will do with this acreage in the future. Meanwhile, Tullow has been reapproved to operate 3 of the 5 blocks it was briefly awarded in 2018 and is working to get the others back. The original contracts for these licenses were signed by the former president, Pedro Pablo Kuczynski, on his last day in office before resigning to avoid impeachment. Suspicious of those circumstances and citing a lack of due diligence with locals, the subsequent administration later revoked those blocks from Tullow, but the regulator, Peru Petro, is working on reawarding them. Over in Venezuela, most of the offshore activity is taking place in Lake Maracaibo by around 37 drill barges, although only about a quarter of those are currently working, if even that many. Maersk and Schlumberger used to manage a number of these units, but both of those firms handed over their interests to local outfits several years ago. There are also 2 owner-operated jackups in the country that PDVSA has at its disposal, but the last foreign rig to work in the country was Seadrill jackup West Freedom, which worked on the Cardin 4 project for the E&I-led joint venture in 2017. Some of the only viable options for the country come from PDVSA's joint ventures with international oil companies like E&I, Chevron, Equinor, Total, and Rosneft. But not even all of their projects can get off the ground in the current market. President Nicolas Maduro pledged in February to more than double Venezuela's production to 2 million barrels per day by the end of 2020, but production has only continued to decline, falling below 400,000 barrels per day by June. And finally, over in Uruguay, the government is working to bring operators back. In 2016, Total failed to find hydrocarbons with the Raya 1 well, which at the time set a record for the greatest well water depth in the world of nearly 11,200 feet. Due to its remote nature in deep waters, exploring off Uruguay became just too expensive, and ultimately operators gave up all of their interests offshore. The country's third lease sale, held in 2018, received no bids, but last year ANCAP, the regulator, launched a new continuously open licensing system with different terms. This has resulted in 2 blocks being awarded to Cosmos and a 3rd block surprisingly going to Bahamas Petroleum Company, although drilling on these areas is likely several years away at the earliest. Now I'm going to take a couple minutes to look at the offshore supply vessel market in the region to see how it has been impacted by recent events and what the future is shaping up to look like. The boom and bust in the oil field services industry market over the last 10 years has resulted in a much younger and more technologically advanced fleet of offshore supply vessels, which operators are now getting at bargain day rates. Though depressed, activity in South America hasn't troughed as low as the U.S. Gulf of Mexico. OSV term utilization dropped to about 61% in South America this year, compared to 18% in the U.S. Gulf. This forced many OSV companies from the U.S. to pursue more projects in Latin America, which has increased international competition and put downward pressure on day rates in Brazil and Guyana. The near-term OSV outlook for South America is better because of long-term E&P plans made before the first quarter of 2020. At the moment, day rates for OSVs are at historic lows. Vessel contracts fixed in Brazil over the last 3 months have marked new lows for the region, which will help Petrobras reap significant savings over the next 1 to 2 years, but at a great cost to the suppliers. We were expecting a much stronger growth in Latin America this year, but that was before the COVID-19 pandemic. As a result, operators will find plenty of international competition for vessel term charters. The second half of 2020 should offer more rig starts than roll-offs, so slightly more demand for support vessels is anticipated. Operators are already getting good value for their OSV dollars spent today, but in the long term, the fleet is aging and new build orders are practically non-existent. When operators next demand greater technological sophistication from the OSV industry, the price will be high. But for the next few years, the oversupply of vessels should keep day rates low. As with the rig market, operators should not expect the same level of day rate savings with OSVs as experienced after the 2014 downturn, as contractors have already been operating on very thin margins for years now. And before I wrap up, let's take a quick look at the field development activity in South America, which has also been on the decline as of late, but less so. Here you can see the most common development scheme used in Brazil is the floating platforms with subsea trees, which is the gray bar. And this trend is expected to continue over the next 5 years. Despite current market conditions, Petrobras is moving forward with its most important projects while divesting assets in shallow waters, thus keeping its focus on its most profitable assets. Tenders for new FPSOs to develop pre-salt fields are ongoing, and though some delays have been seen, Petrobras doesn't seem willing to postpone its plans for the Buzios development. 4 FPSOs currently produce the field with record output, with a 5th unit currently under construction and plans to launch tenders for 3 more units in the near future. While a huge majority of development work in South America is taking place in Brazil, Guyana is starting to make its mark. Activities are underway with ongoing development of ExxonMobil's Liza field in the Stabroek block, with the second phase on schedule to come online in 2022. A third project planned for the block, Payara, was previously scheduled for 2023, but will likely be delayed by 6 to 12 months. The utilization of construction vessels in Brazil has been decreasing since the coronavirus outbreak, but like with rigs and OSVs, it is still high compared to utilization globally. This can be explained by the fact that construction vessels in Brazil usually work under long-term charters, leaving less room for significant impact due to short-term issues. The same logic applies to day rates, and while rates have been reduced, it hasn't been so substantial. Once again, there's not much room, though, for significant reduction in rates, just like OSVs and rigs. That sort of wraps up my prepared comments. So I really appreciate everybody listening, and then I'll be around to take questions at the end. Let's see how I can abandon this.
Yeah, you can stop sharing your presentation. Thank you very much. I think it was a very interesting insights regarding the current market and the challenges that we are facing, right? So I will now pass the word to Heitor. Heitor will introduce Carlos Rocha. Carlos Rocha will be our next panelist, talking about the Brazilian resilience in the upstream Brazilian market. Go ahead, Heitor.
Carlos, thank you very much for your presence here today. Gents, let me show you a little bit of Carlos on this CV. Carlos is a director of AGS Market and is a specialist in technology for upstream oil and gas production, and he's in the analysis of the Latin American market. Carlos' main areas of focus include technology selection and cost analysis for offshore and unconventional projects. Mechanical engineer, he brings over 21 years of processing plant design, equipment selection, cost evaluation experience in the energy sector. Prior to joining AGS Market, Carlos worked with several companies in all aspects of the energy production chain, from the main engineering companies like Chemtech Siemens to the equipment suppliers like GE Power Systems, to the main energy companies located in Brazil like Petrobras and Shell. Mr. Rocha holds a bachelor's degree in the State University of Campinas and MS in Naval Engineer from São Paulo University. Since 2011 in AGS market, Carlos participated in the main part of development of pre-salt projects under the Brazilian local content requirements and worked closely with local operators to evaluate strategies to achieve the results with the best procurement strategy for costs and schedule. He is the leader of the Latin American Cost and Supply Chain Service, covering all projects and supply chain in the region. Carlos, thank you very much. The stand is yours, please.
Okay, thank you guys. Let me share my screen. I hope.
Yeah, we can see.
Okay, thank you. I will turn off my webcam just to increase the broadband available for me, right? Because the internet is not the same nowadays. So I'm going to talk a little bit about the projects in Brazil and what you call the resilience of the Brazilian upstream. With the second, how can I say, oil shock, it's a doubt the capacity of the Brazilian market to withstand again another shock, and there are doubts about what can happen with the project, what can happen with Petrobras, and what can happen with the supply chain. So let me start this presentation. Show a little bit what's happening in the region. So you have here in this chart a picture showing the investments and the reduction of the investments over the previous year of the main companies operating in Latin America. As you can see, you have here ExxonMobil and Shell with numbers above $20 billion of investment. But of course, these companies have a worldwide footprint. This investment is not just in the region, it's very spread around the world, and with a significant part in the unconventional in US. And you have here the Latin America NOCs with the investments much more concentrated in the region. We have here the two companies with more investments in the region are Pemex and Petrobras. And in general, we see that all these companies are planning for a 20% decrease in the investments compared to the previous year due to the change in the market. It means the reduction in the demand and the consequential reduction in the oil price that came after a price war between Saudi Arabia, Russia, and the United States. So the question here is what can be the results for the supply chain and the companies here in Brazil? And I will try to show you that the impact will be much smaller than happened in 2014 because the situation is very different. We can see that in the beginning of the downturn of 2014, we also observed reductions in investments around 20%, 25%, the same amount that I'm showing here, but the conditions were very different, especially here in Brazil. So the first thing that I'd like to show, this is what happened between 2017 and 2019 with the bid rounds that happened in Brazil. In 2014, we had a scenario where Petrobras were responsible for the exploration activity of most of the blocks and the areas in Brazil, with a very small participation of the international and private oil companies. Right now, we can see that from the total area of the blocks acquired in the last bid rounds after 2000, after the downturn, only 25% in area belongs to Petrobras, or 36% in terms of the number of blocks belongs to Petrobras. And you have several other companies with significant participation in the market, like ExxonMobil, like Shell, like British Petroleum, like Wintershall, like Chevron. It means Different from 2014, we have a much more diversified market, and we have a lot of companies that will be investing in the exploration market. It means more drilling, exploration drilling in the market compared to 2014. We also have a situation where Petrobras in the fields under development have much more partnerships with the other companies. So the share of Petrobras is smaller than the fields under development in 2014. So have more participation in terms of sharing the capex with the partners. And you have a different situation also relatively to the financials of Petrobras. In 2014, we had everything that happened. We have a sudden change in exchange rate. We have Petrobras paying for the fuels here in the country. You have the Lava Jato. We had several conditions, including several projects delayed that caused the company to become heavily indebted and with a very low cash flow. That compromised very strongly the capacity to make new investments. And right now, because of the quality of the projects that Petrobras is developing right now, the cash flow is much better, the indebtedness is much better, and the company is operating with a much slower lifting cost. I will show in the next slides how it's happening. So we can see here the pipeline of projects that we have nowadays in Brazil. We have ongoing the P71, Sepia, Mero 1, Búzios 5, and Mero 2. We have from Equinor, Bacalhau, and we have Marlim 1 and 2. And you have, in terms of proposals or bids, we have Itapu, Mero 3, Mero 4, Maromba Atlanta, Wales Park, and you have waiting for entering the bidding process, Búzios 6, Búzios 7, the fields of Sergipe and Nyon. What is important to know from all these fields is for most of them, especially the pre-salt fields, the break-even price is below $40 a barrel. I know that Petrobras talks about $25 a barrel. We believe that $25 a barrel can actually be achieved under very special circumstances, but the general case will be something between $35 and $40 a barrel. That is enough to be profitable under the current and the short-term market conditions for the next years. Of course, there are other projects that maybe will be on trouble. Of course, Marlim 1 and 2 no, because they are ongoing projects, but you have other like the Sergipe fields, Maromba or Atlanta, that can experience long-term postponement different from the other ones. It means that we have in Brazil a very consistent, a very meaningful portfolio of projects that are profitable under the current market conditions. And if you think about the ongoing projects, we have at least 6 projects that are large projects with large platforms that are in relatively early stages of the construction. It means that they will be demanding from the local supply chain for the next years, and will be demanding capex enough to keep the supply chain with a minimum amount of projects to survive in the next years, enough to overcome the period that we believe this crisis will be, these market conditions will be pressuring the oil price. And of course, all these projects that I'm showing here, they do not have only a very low break-even price just because they are much cheaper to build. They are being built under very different market conditions. In 2014, when the downturn happened, Petrobras had to develop several projects, for example, under long-term drilling contracts, with day rates about $400,000 a day or $500,000 a day, and contracts with 4 or 8 years that didn't allow the company to achieve an immediate cost reduction when the downturn came. Now we have a completely different scenario. We have Petrobras operating with contracts of short term and with very low day rates. That's helping the company to deliver all these projects with very low local content. We have with very low capex. We have also the question of the local content in Brazil that in 2014 was very strong and kind of forced the company to build the platforms with the shipyards that was becoming activity in Brazil and developing these projects with a longer schedule and a slightly larger capex compared with the international benchmarks. What is not the case right now? Well, for the ongoing projects, we still have several of units hired in that, some units hired in that conditions, but to have a lot of companies that are being leased or being built internationally with much lower capex that was experienced in that time. Let's talk about operating conditions. We can see here in this chart how the conditions of the wells at Petrobras have allowing the company to increase continuously the size of the platforms. So Petrobras is having a huge cost reduction with scale effects of these platforms. Of course, one platform of 100,000 barrels a day of production have a much smaller lifting cost than the equivalent one with 1,000, because the two platforms have more or less the same crew and have more or less the same demand for logistics, and but one have much more production than the other. And more important, you can see here the chart of production of the main platforms of Petrobras in Pre-Salt. This data shows up to 2018, but in 2019 they remained with the same trend. We can see that the platforms of Pre-Salt, they achieve the plateau of production extremely fast, and they are able to sustain the plateau of production for a long period. Different from what happened in Gulf of Mexico, different from what happened in the coast of Africa, and different to what happened historically in Campos Basin. And this is very important also, this increase in the operation conditions, because for these projects that are being developed right now, Petrobras and the other companies already achieved a lot of discounts from the suppliers. You can see here our cost index. You can see here, for example, for offshore cost index in 2014, in the third quarter, that was the highest point. We had 247 in the index. The lowest value was in 2016, in the first quarter, 170. And we are experiencing right now 180. It means the suppliers didn't recover the market power that they had in 2014. So we are still, the oil companies are still operating and hiring in very good economical conditions. Of course, it's not that good for suppliers. There are several suppliers that are heavily indebted. That are several suppliers that are seeing their margins being squeezed. In some cases, even more that we can accept. We have seen some bankruptcies, and but for the oil companies and for the projects, these conditions allow the companies to only slow down the projects a little bit to match the cash flow with the current oil price, but actually not having to postpone or cancel a large amount of projects. And as I told you, these characteristics of the pre-salt are very important to the cash flow of the companies. I'm showing here in this curve the OPEX per barrel. Of course, you can see that the total OPEX of an FPSO is an amount relatively constant in time. In the end of life, one thing compensates the other, less consumption of chemicals, but more maintenance. So we have a more or less a stable OPEX during the lifetime, but we have a drop in revenue because of the drop in production of oil. That's the natural decline of the fields. Here, this chart shows a typical platform with $65 per barrel, and achieving this lifetime in the 29 year when the production squares, when the revenue squares with the operating cost. But most of the platforms of Petrobras, they are operating still in this region with a very low OPEX per barrel, a very low lifting cost. It means that the company is having a very good cash flow from all these projects, what puts the company in a very healthy conditions to keep going with the projects with not much postponements or cancels in the current market conditions. And also, we can see that Petrobras in Brazil is going further. In this curve, in this chart, I show the production here, and I show here the load factor. And what I'm showing here is that about 70% of the oil production in Brazil is being delivered by platforms that are operating above 8% of the nameplate capacity. It means that 70% of our production is being delivered by platforms with very low lifting costs. And this is a unique condition in the offshore market. In Mexico, for example, is 40%, and the Gulf of Mexico is a similar amount. In Brazil, only 160,000 barrels a day was being delivered by platforms operating with less than 15%, and most of these platforms are being decommissioned or farmed out by Petrobras. It means that the company is not just reducing the capex for the current projects, it's achieving a very low operating cost by their best platforms because of productivity of the wells, but is also getting rid of the most expensive assets in terms of operation. It means that it's making everything that is possible to save cash flow, that will allow the company to continue with the project, to continue with the procurement. And also the company had postponed for 90 days or more any new very large contract, but just to see what's going to happen, happening in terms of demand, drop in the demand of oil due to the pandemic. But the company is in a very healthy conditions to go ahead with all the projects, and above of that, have more partners to participate of these investments. So in Brazil, we followed all the lessons learned in each period. We did everything according to the book up to now. In 2013 and 2014, we see a large expansion of the projects, as happened in all the world, with a very ambitious developments, exploring new frontiers, due to the easy access to capital to fund project expansions. That's one of the reasons, because Petrobras and several other majors became heavily in debt, with heavy debts. And in 2015 to 2019 was a time of capital discipline with reduction of spending and the focus in the core business. If you think about Brazil, is clearly pre-salt projects. Divestments of non-core business, that it didn't happen so much in Brazil in this period because legal aspects. We have a national oil company and everything like that. And the limited borrowing capacity with projects funded entirely by cash flow. And we achieved 2020. And in 2020, one of the messages that we are saying to the market is stop squeezing suppliers, because suppliers, they are in the very poor conditions, financially speaking. They gave all the cost reductions that would be reasonable to give. So it's a time to focus in the operation discipline, in digitalization, in reduction of the operation costs, in the commissioning of expensive assets because they are producing much below the nameplate capacity, and to a period that we will probably see more mergers, acquisitions, and bankruptcies from oil companies. We hope, of course, that it does not happen in Brazil. So this is what I'd like to show to you, is a snapshot of what we believe for the Brazilian market. I hope I gave an optimistic message. What means the Brazilian market is in a very healthy conditions. It's much better than any other region in the world nowadays. We are in a very extremely good position right now, and it become because of the change that all the markets as a whole, all the things that were made in the last years. Thank you very much, and I'm opening for questions right now.
Thank you very much, Carlos. It was a very interesting presentation. We have received a certain amount of questions, so let's try to address as many as we can. Okay. So maybe starting with Carlos, one of the questions is how do you see the ongoing project? How do you see the balance between the ongoing projects and the existing rigs in Brazil? Should we expect an increase in terms of number of rigs or a decrease considering the ongoing projects? How do you see it?
Yes, what we see is that there are the only tool that the company, especially Petrobras, that is responsible for most of the projects. The only tool that the company had to reduce the investments is postponing the drilling and the connection of the wells and the platforms, things that the company in fact announced. So you cannot, in this point, you cannot stop or make a very long postponement of the construction of the FPSO, right? Most of the procurement of the subsea equipment is already done. So what are the things that the companies can postpone? Is the offshore installation of the subsea system and the drilling. So we do not see, we see that the drilling market will be the one most impacted when we are speaking about the ongoing projects.
Okay. So Justin, we have a question for you. Considering you have mentioned in your slides that for Colombia, there are new drilling plans for Petrobras, but also for Noble Energy. We saw recently the acquisition of Noble Energy by Chevron. So do you expect the drilling plans to continue in Colombia after the acquisition?
Yeah, I would still expect that probably to happen. Of course, the timing will obviously be more up in the air now, and we have to see when this deal gets done. But that contract is already in place, so that would probably be carried over. But outside of the one drilling plan we already know about and Petrobras doing their stuff, these new agreements between the government and the operators have more stringent requirements for performing more dedicated phases for exploration. So before, it was really kind of more of a wild place where the operators could sort of dictate their own schedules, and then so a lot of things just didn't ever happen. Now they have more stringent timelines that they have to follow through. There's most of the contracts that have been signed between the operators don't have drilling requirements in the first couple of phases, and they can drop out ahead of time. There's a couple of them that do require it, like Shell and Ecopetrol taking over Anadarko's blocks. Those blocks do need to be drilled on before the end of 2021. I think it's at least a couple wells to appraise those, but those are large natural gas discoveries that they need to get on. As for the exploring the other blocks, it's a little bit more unclear as to when drilling will occur, but I would expect to see it in the next few years. But again, everything is a little bit thrown off now by the timing of because of the coronavirus. So we have to see when things might get delayed, and extensions are being applied everywhere. But I still expect Noble to do their plan. It may not move until, it may not happen until next year, but it still is technically on the books, and should probably, I imagine, not get delayed further.
Okay. Thank you. We have another one for you, and then we jump to Carlos again. So how do you see the plug and abandonment activity in Brazil versus the independents purchasing mature fields in Brazil? How do you see?
Well, yeah, Petrobras has been making a lot of effort to divest a lot of these older fields, partly as a cost-cutting measure, partly as a way to generate more revenue. But when they shut down production on a lot of fields earlier this year, it was a lot of the fields they're also trying to sell, which tends to be problematic if you're trying to then sell them. Petrobras has not really made a huge effort in P&A work over the last few years. You'll see rigs periodically go around and do that. But like I mentioned, the moored semi-tender got canceled a few days ago. I expected that some of that work would have been for P&A work for those rigs, but it's clearly not just on their focus. Even doing things like outside of the pre-salt, basically if it's like Roncador or a few other fields that they're doing improvements on, that they're focusing on, and then most everything else is in the pre-salt. So when you do see guys like Karoon or a number of other companies that are buying up, Trident buying up these older properties, I expect to see them have to do a little bit of P&A work on those blocks, but their focus is primarily on bringing things online or tying them into, in the case of Karoon, tying them into other developments and trying to do that. P&A work is just not a priority in Brazil.
Okay, thank you. Carlos, I have another one for you. The audience is asking that they have read recently about Búzios 9, 10, 11, and 12. Do you think it is a reality or too much? How do you see?
Well, we have in our estimates, that are our estimates based in our own evaluation of the geology. We have several platforms in Búzios. So we believe that Búzios still can accommodate much more platforms.
Okay. Heitor, I think you have raised your hand.
Yeah, I have raised my hand. I have a question for both of you. You guys mentioned that the oil companies have done their homework, they're financially healthy, they divest from non-profitable assets during the last years. And the question is, what, in your opinion, would be the oil price level to trigger the next developments of exploration wells and future wells? A number, please. What will be the magic number on the oil price barrel to trigger this development?
Oh boy. This is probably more Carlos's expertise than mine, but he did touch on it earlier where the break-even price is for the pre-salt fields is so impressively low that it makes it a lot easier to make a lot more projects come off the ground than you might otherwise expect. When you start moving into the frontier areas, putting a number out there would be tough, but I mean, it's got to be higher, especially considering it's remote. Carlos, you might have more insight on that than I.
Well, I will probably talking about just one data. Probably most of you already read the investment plan of Petrobras, and they did a forecast of oil price that they considered to make that development plan. So we believe that value is pessimistic. So we believe we will not go. We're not going to be that bad. And in the next revision, we will have the conditions of the market that will foster more investment, because the next forecast of the oil price for the next years will be higher than that value. That's what I can say is that the projects now, they are with a break-even price that is reasonable. Right? So it's just a matter of cash flow. It's just a matter of having money to do a larger amount of projects at the same time. So it depends of the growth. The speed depends of the growth of the oil price. That I believe will be faster than it's been. I believe the oil companies are being conservative for stockholders.
Thank you.
Okay. Yeah, I think we are running out of time, but the last question, please, for both of you. Guyana is a full success. Suriname was a mix. French Guiana was a dry well. So what is the expectation for Brazilian equatorial area? So this would be our last question.
Well, I'll start by saying, just to get French Guiana out of the way, I know you talked about Brazil, but just to clarify, there will never be drilling off French Guiana again. I mean, the French government has banned awarding new blocks. Total operated the last block, and then that was the block where they failed to find anything, and then they abandoned it. So there will no more drilling, barring legal changes by the French government. There's nothing going to happen there. In Brazil, that's sort of what I was talking about with the Atlantic margin. It's a much more dicey area. The Foz do Amazonas area seems basically off limits at this point, considering what happened with Total and not allowing any permitting there. Permitting has been a problem all along in that region, not just partly because it's just so new frontier-wise, but there's also been more environmental pushback in a lot of those areas. So, I mean, years ago, Premier was leading a rig share between like ExxonMobil and Chevron and BP, a bunch of companies, to bring an Atwood rig over, and that all fell apart. And we're kind of left with Premier hiring the DS9, but it's a little curious as to when that timing will work out. Total has some blocks in the Ceará Basin that they need to explore. It's mostly foreign operators that are actually in that part of the country, and they need probably a little bit more certainty that they're going to be able to perform that work before they can follow through. And I think with today, the way things are, that's just being pushed further out of the likelihood of happening, at least anytime soon, because operators are so constricting their budgets. You got to think that they're more interested in investing in the pre-salts or a few of the other more established blocks or basins in the country before they'll really tap into the frontier areas.
Well, I'd like to say to not have expectations about the Brazilian equatorial margin. Even if it has some amount of oil, a significant amount of oil there, you have environmental problems, and you have another thing, you have a much larger costs, especially operating costs, because the local infrastructure, it's poor. You don't have operating bases, you don't have supply bases, we don't have maintenance sites of large suppliers. So the break-even price and the lifting costs of these areas, even if they are profitable after 2023, we don't consider break-even price for these areas below $55 a barrel. So even if they are profitable in the next years, they will be in the pre-salt fields will be much better. So they will be a focal point of the most of the companies. Of course, ExxonMobil received extremely good contract conditions. So because there was nothing there, so they paid a very little amount of money in royalties or participations for the Guyanese government. But now for the next rounds, once that governments know that there are a special play, there are a huge potential in that area, the conditions will not be the same. And that's something that probably is delaying the development of Suriname, because the fiscal conditions in Suriname are not even close to the ones that are achieved by Exxon in Guyana.
Okay, so unfortunately we don't have more time. It was really a pleasure to have you here. So thank you, IADC again. Thank you, Justin. Thank you, Carlos. Thank you to IADC. And Heitor, if you want to just do your closing remarks, please feel free.
Yeah, Justin and Carlos, thank you very much for this panel. It was great. And everybody, hope to see you again in the next panel that you present most probably at the end of the second semester. Mike, would you please do the final words for us?
Yes, certainly. And thank you to the presenters. We really appreciate Justin and Carlos' remarks, and we certainly appreciate the officers of the chapter and the coordination to organize this and to put it together. Thank you so much. We look forward to everyone keeping safe, and we will look forward to seeing you soon. Thank you.
Okay, thank you. Bye.
Thank you.
Thank you.
Thank you very much.
Have a
Bye,
nice
everybody.
day. Thank you.
Bye-bye.
Bye. Bye, everybody.
Thank you.